Good morning, macro ghosts. Welcome to Macro Market Monday. The S&P 500 is holding steady at 6836, up 1.4% year to date amid resilient growth. The Dow Jones powering through 49,500, gaining 3% so far year to date, but it touched above 50,500. We're looking to reclaim that level. The Russell 2000 is really the star, surging 7.6 on small cap momentum. And generally, small caps run after large caps do, and that's what I'm going to be looking at today. Also in this video, I'm going to look at straight technicals and mix in a little astro to show you how I hedge for the downside while keeping my portfolio intact. If you are here to get rich quick, I'm sorry that ain't happening. But if you stay for the macro content, you may get 1 to 2 trades a year, no expectations, that can really significantly boost your portfolio size. So let's get into the technicals right now. Welcome. It's Monday, February 16th, and this will be a Monday macro melee into finance. I wanted to do this. I've been offline for a couple days for some personal stuff, but I wanted to get back in as soon as I could and go over the macro market, because what I'm seeing here is I'm seeing a couple of divergent things happening, specifically with earnings. The big tech Palantir, some of the other ones, Google, Microsoft, they've been either having good earnings and being sold off, or having disappointing earnings and being sold off. So what does that tell me? It tells me that a top could be near, and I want to get to the technicals. I want to cover only the technicals today so that we can perhaps hedge to the downside. So let's first start with the Dow Jones. This is pretty much the easiest one. The Dow Jones continues to make all-time highs, all right? Last week, I believe it hit 50.5, like intraday. Didn't close there, but it hit 50,500 intraday, which is quite bullish. It came back down and it closed the weekly, I believe, at under 50,000. So that could be viewed as a rejection. Yes, it closed under 50,000. So interesting times here. As we can see on the RSI, there is some bearish divergence in the Dow, but this is a high time frame. So what does this mean? It means that the probabilities of the downside are probably 50-50 with the upside, because it can keep making bearish divergence, but it can also pull back here, as this can be looked at as a top. So I could say, okay, it could either pull back or keep going up. It's really 50-50 to me, but when I look at the S&P 500, I see a little bit of a different story. I see more of a 70-30 to the downside, and the Dow Jones will be highly correlated to the S&P. These are indices, so they're going to be highly correlated. The Dow Jones is like 30 companies. The S&P is 500 companies. And as we're seeing here, we're seeing a little bit of a rounded top, just like we saw in 2024, 2025 here before the nuke and the tariffs, just like we saw here in 2022 before they started raising interest rates to all hell and putting us in a 2-year bear market. So what I wanted to identify here is that the RSI is already down. The weekly RSI is already down to 56, although we haven't moved yet. So that's quite interesting and quite good, actually, because the RSI can come back down to 30 on a violent move, but having it almost halfway to 30 already from its high of 70, local high of 71, it's kind of okay. You know, it could come back down here, and that would be like if there's a nuclear sell-off and RSI comes down to 30 or 35 or 25, that would be looked at to me as a buy on a local bottom. So I'm looking for things, given Palantir, given Google, Microsoft, given the big tech, AI, big data have stopped going up, I'm going to look for something of a pullback. I also look at the astrology. The astrology is not good. Let me repeat that. The astrology is not good. I don't put all my eggs on astrology. I use it as a correlation. I use it as a beta. I use it as saying, okay, the market's making rounded top. What does the astrology look like? Because if it correlates to bad and the market's making a rounded top, I'm going to take some risk off. So the last time we were here at, 56? The last big sell-off, we were right around here. So the sell-off hadn't begun yet. So it's important to know that, yeah, it was giving us clues right here at 50, at the same level of 56. And then boom, the sell-off happened. And then, the bottom drops out. So we have to be ready for the bottom to drop out again. And one last area of confluence I can look at is the daily Direxon AI and big data bear 2x shares. Full disclosure, I do own some of this. I bought some as a hedge. What I'm looking for here is a trend. What's our trend? Our trend is November low. This is a bear, mind you. Okay? November low, and then a local high, and then a higher low and then a similar high. And then look what we have here. We have even a higher low and then a higher high. So this is all like cookie crumbs. It's giving me hints on what I think about the market because I don't maintain a bull bias. Also, if you're here for a quick buck, that's probably not going to work. Markets do not present to you quick riches. Anybody that promises you that is lying to you. There will be opportunities to take advantage of the market, either to the upside or the downside, to make us big money. But we should not expect that. So that is why I put so much effort into looking at bearish trends. And this is a bearish trend here, which has a positive bias. So we can be buying this bearish fund as a hedge, which is what I did because I don't like what I see on the S&P, to be honest. Now, in markets, things usually go from big to small. And that's always been the case with the small cap Russell Index, small and mid cap. The Russell broke out. So we could expect maybe a 1-year run in the Russell while the large caps either consolidate or sell off. So based on the technicals, I'm looking like this is a little bit bullish for the Russell, and my measured move would be to 4,000. So Russell would include IBRX, Humacyte, HUMA. These are small mid-cap stocks that are not in the Dow Jones or not in the S&P yet. So I'm bullish on those right now. Again, we are at an RSI weekly of 63, so we could be putting in bearish divergence for a long time as we make higher highs. That's what I'd be looking for. Other than that, that's going to be a wrap for today. Thank you very much for tuning in. If you tuned in to the end, like, subscribe, comment, and follow me on X, follow me on YouTube, and I will see you in the next one. Thank you very much.